Hello, namaskar viewers. I am Sanjeev Pandya welcoming you to this week's episode of the Business Talk with Ajay. This is the show brings you a lot of business information as well as tax related information because businesses and taxes, they can also go together. And the other reason is the show is sponsored by CPA Services, a full-fledged, complete professional and one of the most popular accounting firms in the area with 3 locations in the state of New Jersey, but they have clients all over the country and they can help you out with any tax matter, personal tax matter, corporate tax matter, payroll services, bookkeeping services, virtual CEO, virtual CFO, you name it. It's a full-fledged professional accounting firm because they have trained, knowledgeable and experienced CPAs on hand. Not too many CPA firms would have that, but CPA Services make sure that they are there to help out taxpayers for any tax related matter. They can also guide you where to invest your money, extra money, so you can save some taxes, you can save some tax liability. Not necessarily you get the refund, but you can save the taxes because CPA Services believes in doing taxes right, and that's what it is. With that note, I'd like to welcome Mr. Ajay Kumar, CPA and MBA with CPA Services for over 25 years to the show. He brings his knowledge and experience and shares it with us every episode right here on the Business Talk. Ajay, welcome to the show.
Thank you, Sanjeevji. Thank you for the kind introduction. And you're right, 100%. Number one complaint about the CPA is not that my CPA doesn't know. Number one complaint is my CPA is too busy to pick up my phone. My CPA is too busy to do what needs to be done. That's why we have 3 locations and 70 plus accountants working for CPA Services to make sure we can do what needs to be done for you.
Absolutely. And that's what, nowadays you got to be at the fingertips when client calls in for a question. No question is a silly question. I always say that, right? So whenever they call in, you got to be available. And that's why CPA Services is known to be there anytime that the client calls in. Anyway, with that note, yes, by the way, you can contact CPA Services by calling 908-380-6876 or visit their website, sciencecpaservices.com. Okay, so we are now almost, let's say, end of October, and the end of December is just 2 months away. 2024 is literally 2 months away. Everybody's going to get busy right now because end of October, festive season has already begun, and then we're going to have Diwali days and then Thanksgiving and Christmas. What you should be really knowing is that year-end tax tips. These are the tax tips that Ajay will share it with us that will help you to understand the taxes, as well as it will help you to claim deduction on a certain thing that you didn't know. And you should be aware of it, whether you're filing personal tax return or your company's tax return. So let's pay attention to this year-end tax tip that Ajay is going to share it with us.
Absolutely, Sanjeevji. Thank you. So a lot of small businesses. Today's episode is about small businesses, year-end tax tips, things that you can do, that you should do before the year end, before December 31st, to make sure you can minimize your tax liability. So if you have a small business, you do not want to miss this episode. There are a lot of things that you can only do before the year end. A lot of people will come to us, Sanjeevji, during the tax season. What can I do to reduce my taxes? Can I reduce my taxes? And I'll politely tell them it's too late for the last year. You can do it going forward, because a lot of things, a lot of changes have to happen before the year end, before the year is over. The taxes will be filed for this year, next March, April. You have to take certain actions, certain decisions this year before the year end. So stay tuned for this year.
Absolutely, yes. So now let's move on to this year-end tax tips for small businesses. Let's first of all touch base upon a bonus thing. How does the bonus really affect the employer and employees?
Absolutely. So what we're talking about is bonus depreciation. This year is allowed special depreciation when you have assets, when you're buying machinery. And again, I'm reminding you that these investments, this machinery has to be purchased before the year end. If you buy it in January, February, that will count for the next year, not for this year. So if you are investing money, or if you have extra cash flow, and if your profits are higher than what you expected, it's the right time before the year end to reinvest money into your business. So you can claim regular depreciation plus the bonus depreciation that's allowed this year. So when we talk about bonus depreciation, it's an additional expense that's allowed in your business So your taxable income goes lower and your tax liability goes lower. So before the year end, try to buy machinery, inventory, see what needs to be done in your business. Every business is different, but try to reinvest money into your business to lower tax liability. And this investment has to happen before the year end.
Okay, so I guess you're leading your point to section 178, which is for deduction. That means small business owners can buy equipment, can buy software before the year end and focus on their business and have more money for the business by using section 178 for deduction.
Section 179.
Oh, 179, I'm sorry.
Talks about the depreciation clause, Sanjeevji. So a lot of small businesses can invest money into heavy machinery, heavy vehicle, and we'll talk about gross vehicle weight rating when we talk about 6,000 pound vehicle. If your business requires a new car, new truck, try to buy something that's more than 6,000 pound, and we call it carb weight. It's called gross vehicle weight rating. You can just put the model number on Google and say GVWR, and the system will show you gross vehicle weight rating for this vehicle. The vehicle, in order to qualify for higher depreciation, in order to qualify for larger depreciation, gross vehicle weight rating has to be 6,000 pound or more. You have to have the vehicle under the business name. You can't be having the personal name, and the payment has to go out of business, meaning it's a business vehicle. And that again has to happen before the year end, before December 31st, in order to qualify for this accelerated depreciation that we're talking about.
All right, so that's a section 179. Sorry about that. I had for some reason 178 because I was driving on the Route 78. So maybe that might be the reason. Anyway, next let's talk about, you know, how some clients or some individuals want to change their business entity from LLC to S or S to C or to LLC. What would you tell them for year-end taxes?
Absolutely. So the taxes are filed at the end of the year, and the entity that we use is what the entity was at the end of the year. So if you are an LLC, you pay self-employment taxes. So depending on how much profit you are making, it may make sense for you to have this LLC converted into S corporation. If you qualify for S election, S corporation, you don't have to pay 15.3% of self-employment taxes, effectively reducing your tax liability by 15.3%. That's a lot of money. If you are making $100,000 in your LLC, you pay $15,000 extra. If you can have the same profit, exact same thing, not in the LLC, but in the S corporation, you are saving $15,000. So look at the entity classification. What entity classification do you have? Proprietorship, partnership, LLC, S corp, C corp, and if this is the right structure for you at this point of time. A lot of people start with something and not realizing they grew out of this structure. They start with proprietorship, and now after some time they think they should be LLC or S corp, but they never really looked into it. Before the year end is the right time for you to look at how many companies you have. Do you really need all these companies? Can you close some of these companies? And again, that has to happen before the year end. Can you change the entity classification for some of these companies to be more tax savvy about it? That conversation you have to look at before the year end with your accountant.
Okay, very interesting, very good to know. Yes, first of all, the change of business entity is possible. It can be done. Just keep in mind these tips that Ajay shared with us. So Ajay, the next point I have is R&D, research and development. What would be the best tip in that category?
A lot of small businesses, IT consulting companies, bio companies, they invest a lot of money, significant amount of money in creating their in-house product. A perfect example, an IT consulting company typically have few people on the bench that are not placed. When you talk about staff augmentation, there are few people on the bench anyway. If you assign a project to them, people who are not working on the client side, people who are sitting on the bench, if you assign a project to them, you create an in-house product and you can qualify for R&D tax credit. R&D stands for research and development tax credit. So if you are investing money into some product, if you are investing money in sort of a tool, then make sure you understand how the R&D tax credit works. You can search Form 6765 to understand more about R&D tax credit. There are forms that will go through all your file, your payroll details, your revenue details, your expense detail, and see how much R&D tax credit you can qualify for, and then you decide if it's worth for you or not. But make sure you look at it. Have somebody invest some time into this R&D tax credit and see potentially how much can you qualify for, and then you make the decision if it makes sense for you or not.
Very good. All right. The other thing that small business owners, they have retirement savings plans. It could be SEP IRA, 401k IRA, and I'm sure there must be a tip that you can share with us and the small business owners related to this retirement savings.
Absolutely, especially 401k is my favorite. When it comes to year-end tax planning, my favorite is 401k, and you ask why. SCP has higher limit in theory than the 401k, but SCP you can invest in even in March. You can invest into SEP plans at the time of filing the taxes, but in 401k you cannot invest after the year end. So make sure you are maximizing your 401k deduction. If you are a small business, see if you can have some matching plan. If the company is matching some contribution, look at your age. If you have more than 50 years of age, you qualify for additional $7,500. So make sure you understand the plan. Make sure you understand the timeline around it. Make sure you understand what's the benefit and when do you have to contribute. So 401k especially is one of the year-end tax planning tool that we use heavily, because 401k investment has to happen before the year end.
Okay, very well said. Now, this next category, which I think affects everyone, and everyone like to take advantage of it, but they are not sure exactly how it works. So it's better to give them a good tip, and that's charitable contributions. We go to temples, churches, right, mosque a lot, and then we like to give a charitable contribution. How does that work, and what's a tip that you can offer? Again, this is for small business owners.
Absolutely, absolutely. So a lot of people, a lot of small business owner will ask us, I want to do some charitable contributions. Should I do it from my business name or should I do it with my personal name? And it depends. There is no straight answer to it, unfortunately. So if you are doing charitable contribution, you should do it from your personal name. But if this charitable contribution can be classified as a business expense, then you want to do it from business. So in theory, just in theory, a contribution done through business will save you more money than the contribution done through personal. And you say, how? Why? There is a standard limit. With the SALT limit of 10,000, a lot of people don't qualify for itemized deduction anymore. If you don't have very large mortgage, and the mortgages are limited to 750,000 now of the indebtedness. So in most cases, a lot of people don't do itemized deduction anymore. So for them, if you are not doing itemized deduction, charitable contribution is not allowed because you are part of the standard deduction. If the same charitable contribution came across as a business expense, marketing expense, sales expense, take an example. We contribute to the temple and we request the temple, can you put our board, our advertisement, our flyers
banner,
over there?
yeah.
So is it really a donation or is it a marketing expense? So the same money given to the temple as marketing expense have better tax saving than the money given as charitable contribution. But charitable contribution should be under personal name and marketing expense should be under the business name. But a lot of people don't qualify for itemized deduction. So make sure you understand from your CPA, from the accountant, at which tax bracket you fall in. Do you get the itemized deduction? Do you have the standard deduction? And then accordingly you decide how do you want to do the charitable contributions.
Okay, very well. Interesting. These are the year-end tax tips for small businesses. It's time for us to take a short break, but when we come back, we're going to continue. In this category, there are more categories coming up, so please stay with us. Welcome back to the second half of the Business Talk with Ajay right here on ITV Gold. The show is brought to you by CPA Services for any and all taxes related matter, any business related matter, and in case if you or someone you know got an IRS tax audit, CPA Services could solve your problem. All you need to do, give them a call at 908-380-6876 or visit sciencecpaservices.com. A complete full-fledged professional accounting firm, you will be very, very satisfied once you use their service, because they believe in doing taxes right, and they can help you with any taxes or business-related matters. This week, Ajay is giving us year-end tax tips for small businesses. These are very valuable tips, and in our South Asian community, there are a significant percentage of individuals own small businesses because we like to be entrepreneur. Entrepreneurship is something we promote very well. So I'm sure that these tips, all in all, they're definitely going to assist you. So continuing now in the second half, and this one we're going to start with plan for estimated taxes.
Absolutely, Sanjeevji. So as much as it's important to lower your tax liability, the last thing you want is to pay penalties for not paying enough taxes. In the state of New Jersey, your extension can be denied if you did not pay enough estimated taxes along with your tax return filing, along with the extension filing. So if you believe you will owe some taxes to the government, and some means at least $1,000. If you owe more than $1,000 based on your initial computation, you must pay these estimated taxes by the time of filing extension. Extension is not for making the tax payment. An extension is only for filing the taxes. If you owe taxes, you are expected to pay taxes for a personal tax return by April 15th. And if you have a small business, S Corp or LLC, depending on how many members you have in the LLC, whatever your liability is due by March 15th or April 15th. When you file the 6 months extension, this is not for making the tax payment. This is for filing the taxes. So the way it's done, whatever you owe, you do the initial computation, make the payment along with the extension filing, so you don't have to owe anything. You don't have to make any payment when you actually file the taxes.
Okay, that's very important. Estimated taxes is a really, really key thing, and you should, definitely not avoid that. So don't avoid it. You should pay your taxes.
And the best thing is, let's say hypothetically, if you paid more than what you should have paid, you can always take it back. You can always ask for the refund or apply to the next year. So it's a government system. You don't really lose it. You don't lose anything. So not paying estimated taxes is not wise. It does not make sense. You pay a little bit more than a little bit less. And if you think you paid more, when you actually do the calculation, you get the refund or apply to the next year. At least you don't have to pay penalty or the interest around it.
Okay. All right. So now continue with that category. How about considering tax advantage investments?
Absolutely. So there are a lot of investments that you can do that are more tax advantageous than other investments. Say when you have a saving bond, or when you have a certificate of deposit, when you keep money into your savings account, you earn some interest. And on that interest, you have to pay taxes. When you have money in the stock market, you make some money. On that money, you have to pay taxes. What if you could invest money into certain investments, certain funds, certain bonds, where you did not have to pay taxes? And those examples are called tax advantageous investment options, say municipal bonds. We call it muni. Those bonds do not attract any taxes. Then there are some investment into urban employment zone. There are some special areas. If you were to invest money into those areas, you don't pay any taxes. So make sure you understand when it comes to the investment, it's not how much money you are making. It's more about how much money you are keeping. If you make $100 and $30 goes to IRS, then you only got $70. You would rather make $80 if you don't have to pay anything to IRS. So focus on what you are actually saving, what you are keeping, and try to understand about all these UEZ, urban employment zone, where you have these tax advantageous plan. Try to understand about muni, municipal bonds, and other tax advantageous programs.
Okay. A lot of small businesses, they have contractors on 1099,
Absolutely.
I guess, and then they have employees, regular employees. So now, employees classification matter should also be confirmed, should also be verified.
100%. I'm glad you brought it up. And this is also that you have to do before the year end, not at the time of tax filing. Again, we get a lot of situations at the time of tax filing that this person who is working for you should have been an employee, not a contractor. Even though you had capped that person as a contractor for n number of months, try to change it, try to fix it before the year end, so this person has a W-2 at the end of the year, and you can claim that this person was on trial period or was on probation initially, and then it was converted into W2. But make sure you check the employee classification for all the employees, subcontractor that you have, to make sure they are properly classified, especially if you intend to issue 1099 to them.
Okay, very interesting. That is also very interesting. Now, last but not the least, maximizing deductions.
Absolutely. So at the end of the day, the whole game is about making more money and showing less taxes.
Exactly.
That's the whole game is all about.
Yeah.
So what we need to do, we need to create a situation where I'm making a lot of money, but my deductions are very high as well. And deductions are tax deductible expenses. What are those deductions? Well, a lot of them. You could have medical expenses, you could have property tax, you could have charitable contribution, you could have gambling losses, you could have one-time expense. So there are a lot of those options. The key here, instead of listing all the options, all the deductions options, Sanjeev ji, what we want to convey across, what we want you to understand, is not about how much money you are making. It's more about how much money you are keeping. So try to find out deductions. In your case, everybody's deductions are different. When it comes to small businesses, there are businesses that can claim even their grocery as an expense. I said, how is it possible? Well, you have a restaurant, you have a food business, you have a catering business. For you, grocery is an expense. It may not be an expense for somebody else. If you are a travel agent, going to all these international sites is a business expense for you. You are exploring, so you can take the next group over there. So depending on your business situation, you see what the expenses are. The question that we are asked here, Sanjeev ji, in my situation, what could be the business expense? And I say, close your eyes. Ask yourself what expense you wouldn't have had if you did not have this business. And that is a business expense. If I say, I wouldn't be doing this show if I did not have a tax company.
Correct.
So the expense related to this show for me becomes a business expense. So any expense that you wouldn't have had if you did not have the business is a business expense for you.
Okay, very good. I say last but not the least, but we do have a couple of important categories that I really want you to give year-end tax. Health insurance, HSA.
Absolutely. If you don't have health insurance plan, please consider investing into HSA plan. A lot of companies, especially the smaller companies, don't have HSA plan, but a lot of larger companies have the HSA plan. For a small business, a lot of time it does not make sense. It's just too expensive to manage the HSA plan. But if your company offers HSA plan, please consider investing into HSA plan. That's a personal tax planning before the year end, as opposed to a small business tax planning. But HSA plan is a very good vehicle to manage your medical expenses if your business, if your company where you work offers HSA plan.
Okay, interesting, very good. And now maybe one of the last one, capital expenditure. That is the item that we should really touch upon.
Absolutely. As we started the segment with the bonus depreciation, with section 179, with GVW or gross vehicle weight rating. So the intent with the capital expenditure is you made some money, you have some cash. If you can reinvest this cash into your own business, not only you can grow the business faster, make more money through your business, you can lower your tax liability because now you can claim certain depreciation, certain expenses in your business. So if you can see, and for this purpose, Sanjeev ji, I say bookkeeping is extremely important. You have to know where you stand for the first 10 months. You have to know what you are expecting to make. If you think you are expecting to make a lot of money compared to prior years, see what can be done now. See where can this money be invested, and that's when you start considering capital expenditure.
Okay. So now we have covered about 12 categories. These are the ones for the small businesses, year-end savings, AJ. But there has got to be at least a couple of generic tips that you can share with the small business owners.
Absolutely, of course. So the generic tip that applies to everybody, not just for this business or that business. And the low-hanging fruit, I call it, the generic tip is please maintain receipts. Please maintain all the expenses properly. Make sure business expenses are paid through business account, not through personal account. Don't buy the gas if you can claim the travel expense on cash. If you buy the gas on cash, you save 10 cents. But if you can claim the same gas expense as a business expense, you save 30%. So just be smart about your money. Make sure you keep, there is no commingling. Make sure you keep the business separate and personal separate. Make sure you are not paying, sometimes I pay from a business account, sometimes I pay from a personal account, depending on where it is. If you don't have enough money in the business account, move money from your personal account to business account first before you spending it for a business expense. So make sure you be smart about your small business.
Okay, very good. AJ, with that note, we come to an end of this episode, the Business Talk with AJ right here on ITV Gold. Remember, folks, the most important thing is time for you now to look into your taxes. I know holiday season is just around the corner. Everyone's going to get busy, but if you have had a super fantastic year financially where your salary was high and you got some bonus and everything, look into it where you can invest in any one of the plans to save your tax liability. And if you're confused, no question is a silly question. You can make an appointment, go to see Science CPA Services by calling them 908-380-6876 or visit their website sciencecpaservices.com. Once you make an appointment, their knowledgeable CPAs or even Mr. AJ himself, CPA and MBA, will advise you and guide you in the right direction. But do it because this must be done before December 31st. All right, AJ, thank you so very much
Absolutely.
for your
My pleasure.
for your time and sharing the knowledge with us. I am Sanjeev Pandya, wishing you all happy and tax-free days ahead. So long.
Happy Diwali.